Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm here with the 16th update of my Yuh-portfolio, and I started a new position yesterday. So I'm recording it on the 20th of December, and yesterday on the 19th I bought some shares of a new company. I think you already know which one I'm talking about if you are following my YouTube channel. And now in total I have 4,098.57 Swiss francs on my Yuh account. And yeah, on the 18th and the 19th our wage got paid, so I could deposit 200 Swiss francs into my Yuh account, and thus I went from 77.43 Swiss francs to 277.43 Swiss francs. You can also see that I had 5.22 euros on my account. That wasn't there the previous time. I only had a cash position of 72.57 Swiss francs after the last buys that I did. And yeah, the 5.22 euros came from Shell. More about that in a second. But thereafter, I'm going to give my quadrant overview, and my quadrant overview is as of the evening of the 18th, and then on the 19th in the morning, I gave in my orders and then waited for them to get executed. So the dividend that I received was from Shell. I have 17 shares of Shell in my Yuh account, and there were, they paid out 0.307 euros. No withholding tax, which is really great from the position of Shell. So I have to fill in my tax return next year, and that's actually getting closer and closer, but that's a thing for next year. And then my taxes are going to be withheld from that. So in that regard, it's really great that I received the full amount of 5.22 euros onto my Yuh account, and that I could start reinvesting that immediately. And then we can go to the quadrant overview. So here are the buyables, and you can see I bought a Volkswagen and I also bought Bayer. And with Volkswagen, the PE value was 7.84. Earlier in the week, Monday, Tuesday, it was actually 8.19, 8.23. So I thought, okay, I'm never going to buy Volkswagen again unless the earnings per share is going to rise again, because it's only coming down, the earnings per share, because they are restructuring and everything. So more about that later. And then Bayer, last time I said it, I moved it from the don't buy to the buyable but section, and then I said, yeah, it's still a bit too uncertain. And then 1 week later, the positive news came that the litigations against Monsanto are going to get support from the administration in the US. So on the side of Bayer, of course. So in this regard, it's less likely that Bayer needs to pay a lot of money concerning Roundup, and that took away a lot of the uncertainty for Bayer. And yeah, it shot up. Actually, 2 days before, there was also positive news for Bayer, or maybe some people already knew that this decision was going to get made in America, and those people maybe already traded 2 days before the news. You never know that, but it's a possibility. Of course, they are definitely going to look into that and not find a thing. But it's most of the time that huge news always is preceded with a rise, and nobody knows exactly what is going on. And then 2 days later, the news comes out, and then you are like, okay, so probably people already knew that and were positioning themselves and bought a lot of shares. And yeah, there was a rise of 35% of Bayer this month, and I didn't profit from that. I was 1 month too late to pull the trigger on Bayer, but I bought BASF, and BASF is also a really great company. They are, yeah, more or less equal to each other, Bayer and BASF, when you look at the valuation models, book to price and earnings to price and stuff. So in that regard, I'm not too worried. Volkswagen is actually the cheapest stock that I'm following when you look at the book to price value. So yeah, price book value is 0.23 with Volkswagen. So in that regard, I believe that I made great buys. And the other ones, the viable but needs to drop. Swiss Re moved from the viable but section to the viable but needs to drop section. And yeah, I understand that a lot of people think that Swiss Re is now viable, but it's still a bit too expensive. Certainly when you look at AXA, that one is still below 12. And Swiss Re, it needs to be below 12 and it's now below 13. It's the lowest difference so far between Swiss Re and AXA, but still the difference is too big. ENG, one of my best buys in my portfolio. Unfortunately, I don't own that much of money in ENG, but yeah, it's performing great. But still, yeah, it's for me, it's overpriced. It's a bank, and I got burned with Fortis back in the day in Belgium, so I'm always careful with banks. So that's why the PE of 10 is there, and I'm going to stick to it. I'm not going to increase it. And when a bank reaches a PE of 20, I'm always going to sell. And with that being said, you already know that ENG, when it's going to go up more and more and more, and it reaches 20, then it's going to leave my portfolio for sure. Then you have Emirates, which is actually quite expensive right now with 22.68. So with Emirates and Holcim, I'm actually doubting whether or not I should think about selling. When you count them together now, they are well above my previous set price for Holcim to sell. That was 115. Now they are worth more or less 120 together, I believe, even more. So I'm really starting to doubt whether or not I should just sell these positions. Yeah, it should go to a PE of 25, I believe. So Emrise is almost there. Holcim is 4 PE values away from that. Then you have PSP, 20.40 PE, and you know that I take an earnings per share of 7 compared to 9 on Yahoo Finance because of the valuation of their real estate portfolio, which is, yeah, it's a bit too optimistic in my point of view. I I believe you shouldn't calculate the value of the properties into the earnings per share when the valuation is rising or diminishing. It's always a bit annoying that PSP is doing that, but yeah, I'm used to it, so I always calculate my own value, and for me, the earnings per share is 7. AB InBev is now above 18. It was at around 17 for a whole time, but then the last week and a half, it rose like crazy, which is nice, good for quite well for my portfolio, of course. And then you have and the not viable reaching the selling limit. There are a lot of movements within this category, but actually it's all still the same companies as last month. And Enel is now on top of this list. The only bad thing, so the earnings per share is moving up. It's actually going to go towards 0.68, but now I already put 0.66 in, and the debt level is for me a real problem. They moved it down from 2023 to 2024, and then in 2025 they increased it once again. I don't know why they are letting go of their debt control like that. If this number was around 56 right now, I would have moved it to the buyable but category. And I don't understand why so many people in Italy are buying Enel and Eni. Okay, they are good companies, but they are way overpriced right now. Just my opinion, not financial advice, but yeah, they are moving up and up and up. Especially Eni, I don't understand it. It's sometimes crazy. Swatch is moving up as well, which is great because okay, in America they are doing great. The tax there, the tariffs are diminished from 39 to 15%, and with backwards application, how should I say that? So it's when the moment it started with 39%, they needed to pay that, but now they have an agreement. It still needs to be signed, and they have until February, the end of February, I believe, the Swiss government to have it all in writing and sign the agreement with America. And it's with backwards working, so all the excess of tariffs that they paid between 15 and 39% from the end of November till or end of October till February, all that money they will be able to recuperate, which is quite nice, of course, for Swatch. And on the other hand, we know from Mr. Hayek that they had a huge supply of watches that they already sent to the US before the tariffs actually went into order. So in that effect, for Swatch, it's not that big of a deal, but it's okay. It's really good, of course, that in the future the 39% is from the table and that it's going to be 15%. Although now with the F-35s that Switzerland ordered from America, they need to pay more towards Lockheed Martin, and they were going to do that, but now they said in the government here in Switzerland, no, we are not going to do that. We are sticking to our budget, and if they can't deliver all the jets, the F-35s, then they should just deliver less for the difference. So in that regard, I think Trump is not going to be happy with that. And when Trump is not happy, the tariffs are going to remain 39% perhaps. Even though he received gold and he received a lot of gifts from a lot of managers from Switzerland. Yeah, it's a crazy thing what is going on. It's not about the country, the US, it's about Trump, and that's crazy. Infineon, yeah, it even rose further, and now it has a PE value of 54.60. That's another thing that I don't understand. For me, a lot of those companies that do artificial intelligence, they are resembling more and more telephone companies, mobile phone companies. They need to invest a lot in infrastructure. Every time when a new 4G or 5G technology comes out, they need to adopt their or adapt their whole infrastructure and change everything so that they have coverage in new technology. With artificial intelligence company, it seems to be the same thing. Every 3 to 5 years, they have to change all their yeah their GPUs. And if they need to do that, how are they going to generate a profit on those GPUs that they bought from Nvidia? Nvidia is profiting enormously. All the other chip manufacturers as well, ASML as well, because they are at the forefront with the machines that they make for making the chips. So it's crazy that people aren't thinking about the fact that maybe those artificial intelligent companies like OpenAI, Mistral, Lusha, it's for me they are way too expensive because they need to make every so many years they have to make a huge investment just to be at the forefront of the best providers of the best artificial intelligence chatbot. And it's only a chatbot. But okay, what I bought is Volkswagen, one share at 105.5 euros. So I know their PE value is rising as their earnings per share is dropping. They even were above my buy level of a PE of 8 a week before. So it came tumbling down the last 3 days of this week. So I was really happy, and I was happy that it dropped below 8 so that I could pick up one extra shares because I believe their earnings per share will start going up because I believe the restructuring costs are now more or less finished. They reorganized Audi. They also reorganized other companies that they own. And okay, they still need to invest, but Volkswagen is always a company that invests quite a lot. And I believe they are making the right decisions. They went into cooperations with the right companies in China. They also have great partners in America. So in that regard, I believe they are on the right track. Then also the EU decided to not ban cars with motors that burn fuel. So they don't need to stop producing those cars, which is great news for Volkswagen because that buys them more time. And that's exactly what they need. And that's why I believed it was really crazy that the last 3 days Volkswagen kept going down, even though the EU made the decision that was actually quite good for Volkswagen because getting time as such a big company gives you a lot of potential to make things right that you've done wrong in the past. So in that regard, I still believe in the potential of Volkswagen to turn things around. And with this decision of the EU, they get 3, 4, 5 years more to get things completely right. Another positive point is that Volkswagen is focusing on e-vehicles still. Ford, for example, they stopped a lot of e-vehicle production, which isn't the correct way to go, I believe. Volkswagen is still continuing. You see more and more e-powered cars from Volkswagen on the road, and now they also are going to build their own battery plant, the Salzgitter plant, and then the EU also mentioned this plant in their plans to increase battery independence from China. So maybe the EU is going to give some extra financial support to Volkswagen to get this Salzgitter plant running because it's a really important plant in that way. It's really important that just like what Trump says, because in that way Trump is actually right, when you move all the important things like car batteries, like pharma products to foreign countries, and then you are forced to pay quite high prices for the pharma products and also for the car batteries, you as a country you are screwed. So it's better to pay for the raw material and produce it yourself, even though the raw material is going to cost a lot of money as well. But in this way, Europe is better off because you have Iceland, you have Greenland that have the rare elements in their soil, and the US is aiming to take in those lands, but for now they belong to the European continent, and those people they deserve to get the right price, and Europe is going to give them the right price. America, yeah. Trump is just fishing to get more and more out of those parts of the world, and improving the US and not improving Iceland and Greenland. So in that way, I believe the EU and Denmark are the right partners for those countries now and in the future. So in this way, normally Europe is guaranteed to have the rare elements, and Iceland and Greenland are also remaining, yeah, remain to have the control about what is happening with their rare elements. And then, of course, I bought Bayer as well, 4 pieces at the price of 35.5 euros. I finally pulled the trigger. Bayer is in my portfolio right now, so 35.50 euros. And a lot of you will say, hey, but you could have bought already last year. And I know that's a legit question. So I missed out of a lot of profit. 80%, excuse me, 80% if you look at it from the beginning of previous year, or from the beginning of 2025. And in this past month alone, I missed out on 35%. But that's just the way it is. And it all comes down to risk for me. I only have 200 Swiss francs to invest every month. And when I invested it in Bayer, when it was noting around 17.5 up to 20 euros, then there was still a lot of uncertainty concerning Monsanto. There was a lot of drugs tests that were in the pipeline, but yeah, when a drug is in the pipeline, the uncertainty is so high, and then the litigations running on Monsanto regarding Roundup use in America, those claims, they are so huge. When all those came true, then Bayer was worth only around 5 euros. And I don't want to lose money. That's rule number one in investing, don't lose money. So that's what I'm trying to do. Even though I lost a lot of potential gain, I'm not going to risk that. I don't want to lose my money. I want to invest in stocks with 99% certainty, because 100% certainty you never have when you are investing. Every time when you invest, you can lose your money. I know that, but I'm not going to take extra high risks just to gain those 15 euros per share extra. Now I still can earn 20 up to 35 euros per share of Bayer. For sure, it's when everything goes right, it's worth between 50 and 70 euros in my point of view. And the forward PE of Bayer is right now 7.80. So for me, Bayer, when it's a good company, the PE marker for me, the PE level at which I would want to start to buy is 18. And now it's below 8. So it's a great company. It's a great value right now. It was even greater back in the day, but I'm not going to complain about that. You do what you need to do, and you also need to be able to sleep. I will post my link to my video about why is nobody talking about risk, and you can check that video out. I will even put it at the end of this video. I believe I can do that now with adding an end screen. So for me, the upwards potential is still 100%. So for me, it can go up to 70, 71 euro for sure. It's not financial advice, it's just my opinion. And the threat of court cases against Monsanto is diminished greatly now in the US. It's not completely gone. Don't understand me wrong. There is still a chance, but the chances of them really getting a lot of money out of Bayer and ex Monsanto is really low right now. But yeah, it's we still need to see it, and we still need to see a positive PE first from earnings per share first from buyer. And when we see a positive earnings per share from buyer, and then a rising earnings per share from buyer, then we will see the price going higher and higher as well. So I believe next year, when nothing of a crash is going to happen in 2026, that we are going to end 2026 at a price of around 50 euros for buyer. And then we can go to our Yuh-portfolio itself. So on the 19th of December, I deposited 200 Swiss francs, and the total right now that I deposited on my Yuh account is 3,700 Swiss francs. And now on Yuh, I have 4,098.57 Swiss francs. And in the cash balance is now 42.55 Swiss francs. Here you can see all my investments. So they are ranked from the biggest one to the smallest company that I own. So you have Volkswagen, Shell, Nestle, AXA, BKW or BKW, Logitech, and then BASF. BASF is in the red, slightly in the red, only 4% in the red. So that's still a company that I would like to buy more of as well. Bayer is the new one, still in my to buy list as well. And then you have Deutsche Post, you have AB InBev, or here the Deutsche Post can be DHL as well. Then you have Swatch Group, Holcim, ENG, and Emrise. And look at that, ENG, I am up 63%, and with Holcim, I am up 93%. Of course, Emrise and Holcim, you should count them together, and it's yeah, I'm well in the green there, so I'm really happy about how this trade is working out for me. And as I said, I'm also doubting whether or not I should consider selling those two shares altogether for my investment portfolio. They are cyclical, so you have to sell them when they are high, and right now they are actually quite high. Can go even higher, up to a P of 25, 26, but as I said, still debating on that. Then we can go to our Swiss coins. So Swiss coin, it went up in value this month once again. So it went up from 0.020200457 to 0.020045. So once again, 0.00025 up compared to last month. And I gained 10 Swiss coins as well because I did two trades, so 2 times 5 Swiss coins I added to my portfolio. So now I have 7.77 Swiss francs in Swiss coins on my Yuh-portfolio. And here you can see that, yeah, it's only going up, but that's of course because I buy more and more and more every month. And on average, here you have the dip because of the tariffs announcement of Trump. But for the rest, it's actually going up quite nicely. And I have a cash position of 42.55 Swiss francs. I invested 3,721.31 Swiss francs. That's with costs, exchange costs, and reinvested dividends included. Then my investments are worth right now 4,056.02 Swiss francs. The stocks are worth 4,048.25 Swiss francs because my crypto is worth 7.77 Swiss francs. So the current profit loss on the stocks is a profit of 326.94 Swiss francs, or a plus of 8.79%. And that's an increase of 25.75 Swiss francs compared to last month. It could have been even higher, and I could have been here up more than 400 Swiss francs compared to the deposited amount that I have on my Swissquote account, because Logitech lost a lot of value in the past month, especially in the past week. So they came down from 96 to 83, 84. So there I lost a lot of Swiss francs in my U account, but Logitech is still in the green, and I believe it's going to go back up to around 100. And yeah, I'm not worried about that at all. It's always people that at the end of the year they are cleaning up their portfolio and they looked at Logitech, were well in the green probably, and said, okay, I'm going to take the profit and invest somewhere else. I'm not going to do that. I like Logitech. I like their products. I'm using them right now as well. My microphone is from Logitech, and if you don't like the sound, let me know, and then I will go and see whether or not I can buy a new microphone of Logitech. But for now, I believe it's sufficient. And yeah, I have 62.03 Swiss francs coming from the dividends, so 15.56% that is. It's only 0.01% higher than last month. And the rest, 336.54, is actually coming from appreciation of my stocks in my Yuh-portfolio. Then we can go to the total dividend overview, so the predicted future dividend for my Yuh-portfolio. And in total, now with one share of Volkswagen Extra, so there I can expect 31.50 euros in total, and that's brutto. I know you should always keep that in the back of your head that it's brutto dividend, so there is no anticipatory or withholding tax deducted. With Shell, it's what I receive on my Yuh-portfolio is also what I need to declare on my tax return. And now Bayer joined the troops, and okay, Bayer, they reduced their dividends quite significantly to 0.11 euros per share. So it's not because they pay out a low dividend right now that I'm not going to include them into my Yuh-portfolio. Bayer is a great company. They are going to increase their dividend payments in 1 year, 2 years, 3 years. It doesn't matter. I know for sure they are going to increase it in the future. And I'm also happy with 11 cents because when a company is strong enough to admit that now they are going to through a rough patch, just like Volkswagen lowered their dividend, Swatch lowered their dividend. It's a smart decision. When you need it, you need to do it. And a lot of companies don't do it. They want to maintain their streak of increasing dividends. And sometimes that's for the worst of a company. So Bayer did the right thing. They lowered it. And I like managements that do the right thing. So I'm happy with a lower dividend yield from Bayer, and this also lowered my current dividend yield for my portfolio to 3.64, and also my yield on cost is now below 4%. And as I said, it doesn't matter. The good thing is that I bought great companies at a good price and with the risk in mind as well. So this allows me to sleep comfortable at night, and that's the most important thing. And then we can go to Getquin. So here you can see the overview of Getquin. Yeah, it's always the same. It's I need to go to this, and I'm going to take year to date. So you can see that my portfolio is up without dividends 9.90% this year. So that's quite nice, almost 10%. A few a week ago it was 10.20%. So it was way better, but that's mostly due to Logitech, which lost a lot of value. But you can see here all the values. Volkswagen, yeah, now with 5 shares. And yeah, I have now 14 stocks in my portfolio. Still 6 that I don't own yet. So Eni, Enel, Infineon, Siemens. Siemens is really a pity that I still don't own Siemens, because it's a great company. We work together with Siemens a lot in the company where I work, and they have great products. They have a great team. All the engineers where I work together with are great people, and also their technicians are great people. They know what they are doing. And here you can see the dividends for the next year. So here it's calculated 151.67. So it's about 4 francs more than I'm predicting, but they already adjust their dividends a bit in their calculations for next year. So I think they shouldn't do that, but it's the way that Getquin does it, and most of the time they are actually quite correct in that regard. I'm really happy. The only thing that I'm wondering is, so I have 2 accounts on Getquin. I have one account for following my Yuh account, and I have another account where I'm following my ETF portfolio. And on the account where I have my ETF portfolio, I'm also following with the app on my phone. And on my phone, I have a button, and that lets me push the Getquin recap. And now we already have the Getquin recap for 2025. And yeah, here I don't find it. So if you know where I can find the Getquin recap on the computer of Getquin, please let me know in the comments down below. Here you can see my positions. You can go to regions. So wait, I will show more first, because then you can see more. Then you see that I have Europe developed 87.95% and United Kingdom 12.05%. So my positions, you have Volkswagen, you have Shell 12.05. That's of course the UK, although it's UK and the Netherlands. And I bought Shell on the Amsterdam Stock Exchange, which is really important, because then I get the dividends in euro and not in pounds, which is for me really important, because I want to reinvest them and not into pounds. So maybe I also should considering swapping out Swiss Re for another company, because Swiss Re is paying out their dividends in US dollar, and maybe I don't want that, even though Swiss Re is a great company. And I don't understand why they don't give the option then to receive the dividend in Swiss francs from Swiss Re. But yeah, that's something that the shareholders need to decide upon, and I'm not a shareholder yet. And you can also go to sectors, and here you can see that I own 18.02% in consumer staples, consumer discretionary at 16.24%. So you see that I'm actually a quite, yeah, risk avoiding investor, going more to the consumer industries. And then you have materials 14.04%, financials 12.24%, and that's AXA together with ENG. Then you have energy 12.05 with Shell, utilities 8.41, information technology 8.18. I believe 8.18 is Logitech. Here Logitech is 8.18. And then you have industrial 7.52 and healthcare 3.3%. And healthcare 3.3%, I believe that is now buyer. Oh no, you have to go to positions. So buyer, that's 3.3%. And I like that buyer is healthcare, just like Roche and Novartis. But Roche and Novartis, they are priced, yeah, top notch. Novartis is around 18, 19 PE, and Roche is 23, 24, I believe. And yeah, Bayer, I'm picking it up at a forward PE of below 9, below 8. So it's a great thing. And then here you can see also that in 2024 I ended the year positive in the green. It's a bit misleading that the bar is that high, because it's a lower amount than this bar. And here you can see show more. So here it's the price gain is actually lower in 2024 than here in 2025. But both years I'm going to end in the green, and you can see on average it's 19.74% that I'm up. So nothing to complain about there, but I don't understand this number because here you see it's 9.90%, dividends 2.26%, so in total 11.1% or 12.1% gain this year, which is really nice. Realized gain, I don't sell that often, so I haven't sold so far since the beginning of this Yuh-portfolio. So I have no realized gains. Then you have the transactions cost, and the total return here is 425, but of course you need to withdraw the transaction cost and the taxes, and also the exchange costs that I have from exchanging Swiss francs into euros. That costs money as well, but I can't include that here in Getquin, and that's why my total return is 398 Swiss francs. And that's it for today. So thank you for watching to this one. Please hit that subscribe button, hit that like button as well. That helps out my channel enormously. And thank you for watching to this one, and see you on the next one on my YouTube channel. Bye.